Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. A week that brought a lack of any sort of real information. Midweek we were like, no tariffs to talk about. It felt kind of odd. Well, don't worry, it's all back as we look at some of the factors that are weighing into the trade, including a cattle on feed report, which may have got some placement surprises for those looking at the numbers. We've got a lot to break down, so stick around. More's coming up right after this.
It may be small, but this little bean fuels power. It powers a food industry as a source of protein. It's a fuel that powers diesel engines while reducing emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
And welcome back once again. This week, joining me is Sam Hudson. Sam is with Cornbelt Marketing, and Darin Fessler over at Lakefront Futures. And gentlemen, it was an interesting week. I look back to Tuesday, which felt like so much time ago. We were getting hit by a blizzard in the Midwest, and there wasn't a lot of tariff chatter out there at that point. And I can think that's where I kind of wanted to start, with the fact that it was a quieter week. And as you look at the whole week of data, what was the one thing that stuck out to you? Sam, I'll start with you. What caught your attention this week?
I think the thing that just continues to stick out to me is the fact that, corn demand, stocks to usage in general, remains a kind of an undertone for this market, an underpinning of this market. And I don't know that it is going to necessarily equate into a bullish run later on. I think you're going to have a little bit of a supply scare alongside it. But I think it keeps a decent base in this market. And it's interesting because I believe that's going to be the case despite all this tariff and trade concern, simply because the U.S. is the biggest player on the global production and export side of things. And when you look at stocks to usage, not only domestically here, but with the global exporters and global importers, it continues to fall.
What about for you, Darin?
Yeah, I think Sam hit the nail on the head. That's exactly what I'm looking at too. I mean, I don't know how much new crop corn or even old crop corn can fall for that matter, especially if we do have some issues with safrinha crop, and even if the forecast remain dry in the U.S. after planting season. I think it just has that underlying support to this market. And this market, even though right now it seems like it's pretty consolidated and looking for a catalyst, I think that demand story is still there. And it's probably something USDA eventually is going to have to recognize.
So as we look at overall the things that are moving in this marketplace, since you guys both talked a little bit about weather in South America, they're supposed to get some rains in parts of Argentina this next week. I was reading like 4 inches plus. So that obviously is going to be a slowdown to the harvest. What is your takeaway, and will weather for them continue to play out in the trade, at least in the next couple of weeks?
Susan, I think that will play a role, but I think Argentina is almost becoming an afterthought at this point. I think we've seen enough damage there that you're not going to bring the crop back to life. If anything, you could create additional problems if moisture becomes lasting or is excessive. Darin mentioned that the safrinha corn crop, I think, is super important. We're already running 150 to 200 million ahead on demand, mainly from exports, that the USDA eventually will have to reconcile. And if you take any of their production away, it may only put the nail in the coffin on the fact that we will not only sell but also ship that, and could even add to it. And so walking a razor wire edge there, but I think that's probably your biggest concern at this point. I think it's kind of too late to really affect the bean crop in a meaningful way.
Darin, what about for you?
Yeah, I'm in that same camp. I think, Argentina is an afterthought at this point. Brazil's getting pretty close to being done with harvest and beans anyway. So safrinha is pretty much planted. And so right now I'm just simply looking at it from, okay, you're going to get a big corn number at the end of this month. Nobody's going to believe the initial yield that the USDA is going to come out with. And so we're going to look at it from more of, okay, we got this demand. When will the U.S. recognize this demand? And let's start using more of a realistic yield number. And we start punching that in. Okay, now how big of an issue can we really afford if safrinha has some issues, or if the U.S. has some issues? And that's, again, not saying we have a huge bull run, we're going to run out $1 from here, but there's still that underlying support. The funds have obviously shed a lot of length here, so they got plenty of ammo if they want to get back in here to the upside.
So we're hard to believe heading into the last full week of trading for the month of March. And so the focus is going to switch to what we see for crops here in the States, and a planting intentions report that comes out weekend. Any thoughts that you guys might have on what we could see in those early numbers? Darin, I'll start with you.
Yeah, I think it's all going to be at 94. I don't see much more than 95. I think beans could easily be 83, 84, but I think the beans could also be a catalyst too. I'm not that friendly old crop beans, but new crop, there's a lot of uncertainty there. You throw a little bit here and there at the yield, which they're going to probably start at a 52 or high number. Again, if you have some weather here, it's not too much to shave off some of that those numbers when it comes to the carryout standpoint. So again, if we can just stabilize near some high volume levels right where we're at here on November beans, I think this market can move higher just simply on some catalysts that it's looking for at the moment.
And for you, Sam, what are you thinking as you look at those numbers? And I mean, obviously, there's been a lot of chatter about corn versus bean acres pretty early, man. We saw the discussion start in February.
Yeah, that's right. And I'm kind of in the camp where it'll be similar to what Ag Outlook Forum numbers came out. I would even err on the side of maybe closer to 93 or 94 on corn. I almost think the current makeup is providing a risk that, what if we don't get it? If you advertise it at 95 and then have any sort of a hiccup, not only do you have to reconcile that demand we're talking about, but you have to walk back those acres on top of it. And so I think they'll keep a number that's low enough that, continues to assure that price hangs in there, that to encourage farmers to do it. And I'll tell you what, I'm hearing reports in parts of the Northwest Cornbelt where it's dry, where we're not really seeing that big push in acres. I think you're going to see a lot more interest in forage, edibles, stuff like that. And I think in these areas that have irrigation, where you have good APHs, that's where we may see those slight increases because they can buy that insurance against it and kind of have a free roll of the dice here into spring.
So you're looking at areas like Nebraska, Iowa, that are pretty much all irrigated.
Yeah, and parts of South Dakota, up into Minnesota, some of these, quote unquote fringe areas where we typically look for that acreage shift. I just don't know if it's going to be as excessive as you think, especially on those dryland acres where it's quite a risk and they could go to another crop.
What about from a global wheat perspective? We know that Russia's had some issues, the Black Sea region. Then you look even here in the States and parts of Oklahoma and Kansas, there's some concern. I mean, I know the winter wheat crop can be killed 9 times over, everybody says, but is there some concerns as it comes out of dormancy with lack of moisture?
Yeah, I definitely think there is. I mean, if you look at the last 30-day precip anomalies, Kansas is quite dry, even after this recent snowstorm. And so when you look at the major wheat exporters, and they're low. I mean, they're the lowest stocks-use ratio since 2007, I believe. So, I think this wheat market, it's looking for a catalyst. Maybe the U.S. is the catalyst. It's probably more likely the Black Sea will be the catalyst. But again, if you continue to look at, like, let's say the wheat corn spread, that thing has been really taken off here recently. Again, this week has been starting to pull back here with wheat pulling back. But again, I think that wheat is looking for some type of catalyst to make it push higher here. But again, maybe it's dryness, maybe it's Black Sea.
All right. I want to look at this cattle on feed report. Much anticipated. We had decent cash last week. We saw a pickup in the cash this week. Many say we could see more after this report was released at 2:00 on a Friday afternoon, but cattle on feed was down 2%. Would you say the placements was the biggest shocker of that report? Darin,
go ahead, Darin. I think you were looking at those numbers.
Absolutely. 82%. Market was looking for 86%. I mean, we were probably propping this market up in anticipation of that anyway this week. But like I said, with a lot of clients, where's the top? Where's the top? I think it's anyone's guess where the top is at this point. I mean, we had a little bit of pull back here today, correction. We'll see if the market's buying that placement number come Monday.
What about for you, Sam? I mean, obviously, many folks have said the cattle aren't out there in the country, but then we're also hearing cattle guys going, yeah, I'm not filling out the report.
That's right. Well, I think that's a perfect example of what this market is trading. I don't think we really know what to trade off of. I don't think those numbers hold enough weight to say, hey, we have to go up or down just because of this. When you look at where prices have gone to and what was being paid for at the sale barn, you can justify just about anything right now. And so what I'm looking at is just open interest in a lot of things. We've talked about this in the corn, the reduction of fund, open interest. We've seen a pretty big number there in this cattle complex. And as you move forward, if you start to take that out for any reason, that could be a bigger precursor for a big break than anything independent of fundamentals. Because when you look at open interest decline, your volume's also declining. We're going to end up with vacuums. And I think this is what we're starting to see on the way up. Can't tell you what day we turn, but I would guarantee we see something like this on the way down eventually, and see quite a lot of volatility. And as it relates back to the corn market, if we have to see a considerable rise in feed costs again, look out. It could be, quite an adjustment, not only in back month live cattle if you have to rally corn, but also in the front end of the feeder.
And then you look at the fact, Sam, that we're getting into some key grilling times. Folks want to see that opportunity to get some good deals at the market case, but obviously you got to have the cattle to be able to fill it.
That's right. Well, and something which is this lingering issue that's burning inside of me is just kind of a bigger picture thing. Is just the number of producers that could be getting out on a move like this, just from an age and longevity standpoint. If there's no one there to take the reins, literally, it could get interesting from a consolidation standpoint. It's kind of hard to watch and see it all happen, but it's going to take place, and that only feeds into the narrative even more.
And for Darin, the fact that we're going to get the July report back. USDA took it away last year, and now we're going to get that big report. That's got to be at least some positivity for this cattle market.
I think so. But I think what Sam was talking about, though, with the open interest, the fund activity, a lot of people, they don't focus on that when it's bull, and it's going to the moon, right? But the rug could be easily pulled. The funds say, hey, enough's enough, we're done. My fear is that door will not be big enough. I think the volatility that we've seen, maybe due to the LRP, will create the volatility to the downside as well. I mean, these are levels where if you're making $300-400 a head, how do you not start to step in here and at least try to protect some of it, given the type of runs we've seen over the last 2 weeks?
Lots of great things that we've looked at. I want to throw one last question out to you guys due to time, but what are we going to look for next week? Sam, what's going to be the key on your plate as we open up Sunday night?
Something that slowly it's been watching here over the past week or so, and I think will continue into next week. As flat as we've been in this corn market, I think you're going to start to see option volatility continue to creep higher. A lot of uncertainty, a lot of big data sets coming with this acreage and the stocks figure on top of it. If we see any surprises there, I really think you could see a continued flat market. I don't think you're going to get a big surprise out of the acreage numbers themselves. I think they're going to leave us to decide what is or is not possible. And so those weather markets and the forecasts into mid-late April, I think are going to catch a lot of interest. And it'll be interesting to see how quickly anyone could get worked up this year. Back in 2019, it took until almost June. I don't know if anyone's going to wait that long this year if we start to see issues or concern about area on corn, though.
Definitely. Darin, what about for you?
That's where I'm at. It's pre-positioning ahead of the month-end report. I do expect option volatility to catch some bids here. So again, I'm looking at, if there's any sort of weather issues, regardless of what these numbers are, this market could snap back in a big way to the upside. We got to set plans and strategies in place to do so and take advantage of it.
All right, gentlemen, I appreciate both of you joining us for this week's report. A quick reminder to everybody that information on the show is provided for educational purpose and is not intended to influence legislation, government policy, or action. And as always, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's another edition of the Nebraska Soybean Board Weekly Market Roundup.